Hey guys, how are you? It's May 29th, 2020. Let's do a little trade review on the SPY and the NASDAQ, taking a look at this chart, which is a 26-minute chart. And this is what the overnight action looked like generally. And you can see that this was yesterday's action where we had the bulls and then overnight we sold off. So you can consider that a failure, right? You can see we had a bull break above this trading range and then failed. So that level now has more relevance going forward, okay? And you can see how we bear broke below that and then it was oversold because of how drastic it was. So we resulted in a nice bounce kind of halfway through the trading range, and then we kind of chopped around and finally broke bearish again. Now this is overnight action here. So we've established this sort of trading range here with the low being 3014 to 3016 general area. Okay, now going into today, that level looked a bit obvious, I'll be honest with you, and that's why I had a bit of a short bias going in. Okay, so if we take a look at what happened off the open, you can see that we had a couple of fake outs and then we moved higher, and then that high just ended up being some sort of a lower high, and then we chopped around and eventually broke below that, and now we're still sort of in this trading range. We had a bounce back up to that support level, which makes sense, and now we're below it again. So the bears are in temporary control, in my opinion. So we'll take a look at some of the trades I had. I'm not going to go into detail as to the thesis behind every single one of these trades, but I will tell you where I traded. So first of all, I'll show you my trade logs. You can see I was trading the 300 puts on the spiders, and I got in around here, and then I managed to get out later in the day here. I got whipsawed around on my first entry, and I didn't like my first entry that much. Now the moral of today, I realized something very crucial about trading markets, and it's the fact that I'm looking to be trading failures more than actual breaks of things. And I was saying this in yesterday's videos too. You know, whenever you see a move and a failure, you want to trade in the direction of the failure, essentially. So we have this being the low of yesterday around 302.26. 302.26 also had relevance because it acted as resistance on some previous sessions here. So for me, that is a make it or break it level for bear or bull in the short term. We also had 303.57 would have been the high of the previous day. So generally you want to keep an eye on these levels here, because you can see that yesterday 303.57 was in play because we pulled back, held it, and then chopped around the trading range and eventually broke bullish. So that would have been a general good area to base your stop around that general area, just understanding how the price was reacting around that area. Okay, so those two levels were key for me, and then the lows 299.90, and of course it was 301.50 ish. So let's take a look at what happened off the open here. You can see that we opened right near the low of yesterday. You can see that we were bullish to start, and I was looking to get short here. I got short a little too early on this one, I'll be honest with you. So I should have been stopping out probably on a bull break here, but I managed to stick around in this trade for a little longer, and I witnessed some of this. Now I had many opportunities to take profits, and I didn't take profits, and it was actually quite tough to take profits because the market was having a lot of fake outs. Now look at this kind of stuff right here. So this is a perfect example of fake out. So we have a trading range, and you think that it's more likely to go down, so you take a short, fine, right? Now you move lower, have a bear break, but no follow through. That right there is a failure. Trade up in that direction because we had a bear break with no follow through. At this point, we're back up to around the moving average. Again, testing this 303.57 area, which I was talking about earlier. We have a bull breakout straight into a fade. You can see we break to a higher high and fade. Now we have a bear break below this low. No follow through, straight into a bull, right back to the moving average. Once we get to the moving average, we finally see a bear break. This bear break breaks the low of the day, bottom out at 301.45, around 301.50. Take a look at the follow through we get there. We have another couple attempts to move lower, and then we finally move higher because we couldn't see much follow through. So now we're back above where we were earlier, that 301.70 to 302. We're back above that. So now the bulls are back in control because we saw a bear break with no follow through, shorts are under pressure. But again, we just come back up to the moving average, and we're greeted by some more selling at this point. So now take a look at this. We have a huge bear break, which breaks right through 301.50, but sees no follow through, and look at how nice lower wick right back into the trading range into a bull break. So that will get a lot of bulls on board because they're trying to trade against that failure, and it will definitely get the shorts, panicking because they're saying, okay, this is kind of, annoying. Every time we get a bear break, it gets no follow through and we go in the other direction. And take a look at what happens after that. We fade slowly, and then we manage to break lower. So we were greeted by continued selling in a lot of the major sectors. The healthcare sector with a bear trend, more or less, until we caught some buyers later. XLF with a bit of a trading range and finally breaking bearish now. So actually, right after this, when I saw this action here, I saw this break to a low, and my eyes were on 301.50 at this point. 301.50 broke but no follow through. We're pulling back for a higher low on low volume. Again, we're seeing bulls coming through here. So I said, the hell with this. I'm getting out of these puts and I'll wait for a better entry. So I got out for a small loss at that point. After I saw that we had rejected the moving average another time, I said, I'm getting back short because there's still confirmation of being short at this point, where you can see we were testing. Once we broke below it, we tested the 5-minute 12 exponential, and then we tested it another time here. So as long as we were holding that as resistance, the bears were in control, basically. Taking a look at what happened after that, so I got back short, and on this bear break below 301.50, I took off some profits at that point, and then I immediately put in my break-even stop. So I managed to get in these things around 73 at this point, and I took it off around 80 something, and then I put in a stop at 73, and then I was watching. Now, when we saw this break down to about 360, you can see we're making lower lows with no follow through. That's when I decided to cut the rest of it because I was seeing buyers in the other sectors and I was not confident that this was going to be a profitable short. So I took off the rest of it right there on that bull break. And you can see how we rallied right up to that moving average another time and then resulted in another fade. That was a good opportunity to take the short off the moving average another time. Again, bull break, failure. Bear break, failure. So after we had the bear break, this was a good opportunity to get long. You can see we got a nice two-legged bull move back up to the moving average. But now once it's back to the moving average, it's too late to go long at this point. Okay, so when you see this, so you can see we had a bull break. The high was 301.36 and we broke up to 47. So now you can say, I'm going to look to fade this. If we hold 301.50 on the offers, I'm going to look to start scaling in short at this point with the stop generally above 302.26 or these highs that had formed earlier. That was the level that I was keeping an eye on. That's exactly what I did. I started scaling in short on some puts, but on the bids, I was not getting in aggressively to them. I was waiting to get filled on the bids, guys. That's the best way. So you can see we had a pop. Now look at this pop. After I scaled in short, look what happened to the pop. Fade right back down. So anybody who buys into bull breaks like this, you're going to get messed up when this thing starts happening like this, okay? And you can see we had another pop at that point. So this failure here is still valid because you can see we had a bull break. I faded it. Another bull break, and then it's fading again back down. And the support at this point is 301.20-ish. And then we have a bear break by a couple of pennies straight into a bull, but the resistance is still in place. So on this pop right here, I added a couple more contracts, or I added more to my position basically. And again, I'm using this level as a reference point to scale in here. And as soon as we got any meaningful downside, I was getting out of these contracts pretty fast. So I actually managed to get out of these things as we were breaking 301 because I thought it was likely we could see buyers coming in around 301. And it would also be a good place to trap out some shorts. So if you look at what happened here, we managed to have a bear break and then this candle closes on its high. So I was lucky to get out of those contracts for some profits at that point right there. So my average price was around $40 and I was selling them around in the 50s here on this bear break on the offers while we're moving down aggressively. And I got out of them right there, and that would have been a decent place to reverse long because you can see we had a bear break with no follow through, and now we're right back above 301.25, 301.50, decent place to get long at that point. And as you can see, we managed to continue higher somewhat from there, but we never managed to get back above this 302.26 area. And if you were fading breakouts, you would have been making money today. Look at this, boom, failure, boom, failure. An inexperienced trader, when you see a bull, you want to get long, but an experienced trader will see a bull and see how much momentum there is on that bull, and if it's fading back down to where it broke out, you want to be on the fading side of that trade, guys. So this is kind of what I'm exploring now, and that's generally it. So I'll show you my trade log here. We'll just take a quick look at it. 300 puts, I managed to get out of them for a small loss, and then I got back in at 73, sold at 83, sold at 89. This one I sold it because I lost confidence in the trade. I said, you know what, I'm not clear in being short anymore. I'm just going to take it and run. Okay. Then I was scaling into these 299 puts, got in at 50, got in at 40, sold at 53, and sold at 44. This was actually a stop loss. I had put in the break-even stop. After I sold these at 53, I put in the break-even stop and I got filled at 44. Done. This last trade right here, these 231 calls in the Qs, you can see I picked them up at 43, sold at 50, sold at 57. And I'll show you that one real quick here. So again, this is around the same area we were just looking at on the spiders. You can see, again, after the bear break with no follow through, we have a couple of legs up for a bull. And again, this 230.24 and 230.41 were key areas I was keeping an eye on because they were key resistances I was watching yesterday, and they're basically levels that are in play. So again, 230.41, look at this bull right here. You're not going to be buying this, right? Because we're just a bull break by a couple of pennies. In fact, we could have faded that. And you can see we pulled back right there. And I was watching this consolidation here. And I said, okay, if we pull back and then hold 230, I'm going to look to get long there for a scalp. So I'm going to look fill some of these contracts on this little flag here, and look at how that volume was just simply non-existent at that point. And this trade ended up working. I got in at 43, I think, and then I managed to be scaling out as these offers were getting taken out here. You can see we had a nice bull at that point. And it made a lot of sense because this was an area earlier where people were likely shorting into. Let's see here. Yeah, you can see on the 5-minute chart, that would have been an area that is a decent area to grab a short, right? Good risk to reward for a move down. So people definitely had some stops above that level. Once we took that out, the bulls kind of had a bit of a squeeze momentum there. So on that squeeze momentum, I used that to get out of that call trade, okay? So again, scaling in on the bids and getting out on the offers. All right, guys, so that's going to be it for today. I hope you learned something from this video. If you enjoyed the video, leave a thumbs up and subscribe to the channel. See you soon. Fender. All right, take care. Bye.